are fortunate to be extremely well positioned in both of these markets. The cancer care market represents the majority of our medical business, a third of our total business. Nuclear power represents almost 40% of our total revenue.
Hello, I'm John Generone, Editor-in-Chief of IPO Edge. Very happy to be here for the 2025 IPO Summit at the New York Stock Exchange. I'm even happier to be seeing a guest we've hosted before a few years back when they went public. I've got Tom Logan, who is the CEO of Mirion. Tom, thanks for joining us.
John, it's a pleasure to be here today.
So Tom, you guys recently had a couple of events, an Investor Day, and you reported earnings as well just a couple days ago. Tell us what you think investors understand well about the story and what they might not quite yet. Is there still some learning to be done?
What I think investors understand well is our exposure right now to the nuclear industry and to a great extent our exposure to cancer care. What I think people understand less well is really kind of the technological tie that links those businesses. Today, Mirion is the global leader in the detection, measurement, and analysis of ionizing radiation. And what that means is that what we discover anywhere in terms of detector design, signal chain management, power management, et cetera, is relevant everywhere in our business. And it gives a tremendous coherence to our business model and a very nice kind of natural hedge overall.
Makes sense. And I believe that you reaffirmed or reiterated your forecast for 2025 a couple days ago. Is that right?
We did. We had a good quarter. We announced record Q4 earnings, record full year earnings, reiterated our guide for 2025, and are happy with the momentum we're carrying into the new year.
Great. Can you talk about the super cycles that are going to help this business?
There are two really important super cycles driving our business today. Number one is nuclear power. I think people are beginning to understand well the correlation between nuclear power and the true revolution that we're seeing in AI right now. Simply stated, the world just doesn't have enough electrical generating capacity, particularly baseload clean energy. And increasingly, as you look at the so-called hyperscalers, they're turning to nuclear power, both in the form of utility scale as well as the emerging class of small modular reactors to power this revolution, which is really the critical element of their business models. Secondly, there is an incredible trend right now in cancer care, both in the form of external beam therapy, but also nuclear medicine. In the form of external beam therapy, we have an aging population demographic in the West, and external beam therapy is generally prescribed to more than half of new cancer treatments in developed markets overall. There's an opportunity to extend that standard of care globally, but beyond that, there is a revolution taking place in the form of nuclear medicine through the advent of so-called theranostic drugs, which are targeted radiopharmaceuticals that have an incredible promise as it relates to the efficacy in cancer care. We are fortunate to be extremely well positioned in both of these markets. The cancer care market represents the majority of our medical business, a third of our total business. Nuclear power represents almost 40% of our total revenue.
Wow. If I can throw in a question just from a layman's perspective, a couple weeks ago I was in Orlando and I looked at my hotel room window and there was a nuclear power plant out in the distance. Can we expect to see more of these being built around the country?
I think in the United States there's a likelihood we will see a small handful of additional so-called utility scale reactors, the big power plants that we think of with the highly visible cooling towers, the big footprint, et cetera. What I think is more likely over time is that we see the emergence again of this smaller class of SMR, small modular reactors. And I think the likelihood is that we see the greatest concentration of those SMRs on the sites of decommissioning coal plants. So this is how I think the landscape will change. Again, I think in a factor that will be a little bit more subtle, a little bit less familiar in terms of what people think of when they think of a nuclear power station.
Tom, before you arrived, I was going through your earnings report from a couple days back, and something that jumped out at me was that I think 50% of your revenue forecast for 2025 was already in your order backlog. Can you explain why that's important?
It's important, firstly, because when we compare that with where we were a year ago, it's about 3 points better than the backlog coverage that we carried coming into 2024. Again, a record year for the company.
Yeah.
What that means is that as we enter the year, that our overall revenue forecast is well supported, and our backlog, to be clear, is committed contracts. This is not shadow backlog. This is not a softer form of backlog characterized by many. These are hard contracts that really provide a firm foundation to that revenue guidance for the year.
Well, just now in the green room time, I was asking about something that I remembered from our interview 3 or 4 years ago, which was that you have very long-term contracts. Can you explain how that works? And I mean, I don't come across companies very often that have 20-year contracts. So that was really, I mean, it was memorable. Explain why that's important too.
Well, they're really two forms of long duration relationships, I would cite. Firstly, in terms of strategic relationships, we are very proud of the fact that recently, as an example, we signed a 20-year agreement with the largest operator of nuclear power plants in the world, EDF, the big French nuclear utility, where we will act as a sole source supplier for certain content going into their new build activity, and those new builds could number as many as 20 or more over the next 2 decades. What is more common is that if you look at the life cycle of a nuclear power plant, in modern terms, that life cycle can be a century or more.
Wow.
If you consider the construction phase, operating phase, and ultimately the decommissioning. Typically, when we're coming into a new nuclear power plant, not only will we provide instrumentation on the front end, but downstream of that, there will be a predictable recurring and or replacement revenue stream that again will go on for many, many decades. So the bottom line is that we've been around in some form or another, predating the actual formation of Mirion for as long as there has been a nuclear industry.
Wow.
And so we have forged customer relationship capital that is there's many, many decades in duration.
Great. Speaking of long term, let's look ahead 5, 10 years. Are there any catalysts you can tell us about that you can, they're going to boost the business?
Well, there are a few. Firstly, as noted, we have the super trends in nuclear power and cancer care, which we believe will continue to gain momentum. We believe that'll help, improve what we consider to be a strong long-term guidance that we discussed in detail at our Investor Day in December. But beyond that, as we look at the transformation of both the vertical market landscape that we plan, as well as the nature of our business, we see an increasing shift, an increasing pivot to digital solutions. And this is true in nuclear power, it's true in healthcare, it's true really throughout our business, in defense, big science, other applications, et cetera. This is being driven in part due to shifts in customer demands, advancements in new technologies, but it represents an incredible opportunity for us to change the nature of the business that we do, driving towards smoother, more predictable recurring revenue, and increasingly adding utility to our client base. We see that potentially as quite a significant evolution in our business over this time period. Great.
Now, something else that jumped out at me in your forecast for this year is that not only are you very EBITDA positive, even after CapEx, very cash flow positive. Does that give you ammunition for M&A, and is that something you're open to? I think you've said that you are.
We expect it will. Historically, we've been a very acquisitive company. If you look at our M&A track record since 2017, we've done 16 or 17 M&A deals over that period of time. This really is, a key part of the fabric of who we are and a key part of our business model. You may recall at the time of our IPO in October of 21, we talked about how our 15-year growth CAGR had been 12 points, 4 organic, 8 inorganic, and that really underscores the importance of M&A to us. We have been very focused on deleveraging our balance sheet over the last 3 years. Very proud of the fact that we ended the calendar year 24 at 2.5 times leverage, which we think is really a center of gravity for us, a sweet spot, if you will. Given the strength that drives in our overall balance sheet, we do expect to be active in M&A. We have a great pipeline right now, and deals that really represent both of our key operating segments. So we expect to see some activity here. Quite excited about some of the options that are on the table.
Well, Tom, it's been a real treat to have you back again. Also happy to see the stocks up about 60% from the IPO, which is terrific, and trades right down here. In fact, we just chatted with your market maker over at Citadel under the ticker MIR. Thanks for coming back, Tom. It was great to see you again.
John, it's a great pleasure. Thank you.
I'm John Janneron, the editor-in-chief of IPO Edge, signing off the New York Stock Exchange.